Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 9, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We had what's called in the trading parlance a down day. The S&P was down about 0.5%, makes the Spider down a little more than $3. She's been riding the trend line, and by the way, you'll notice it's an on-time type of situation, Mrs. Market Turn. This is something I very specifically taught in the course, the MSF Masterclass series that's going on right now. This is an on-time type of situation, and the market is in the process of getting, ing in italics, rejected from the trend line. Now, whether or not she gets rejected by a lot of points or just a handful of points down to the 20-period moving average, more or less, that remains an open conversation. But right now, she made a turn in an on-time type of situation. Write that down. Put it on a sticky note. Let's take a look at a couple of important places as it relates to the daily chart. About 600, the actual number is 600.17, but this represents the most recent breakout area. Markets have a tendency to do what? Come back and run a test of a most recent breakout or breakdown area, and therefore 600 being A, a big fat round number, and B, secondarily, a former breakout area, we can count on sooner than later Mrs. Market coming down to run a test of around 600, give or take. And oh, by the way, just to note, we have home base, or the 20-period moving average, just below the magic number of 600. Might want to write this stuff down, put it on a sticky note. This is the foundation of how markets work. If you want to learn more than this, stick around. The MSF Masterclass series will be available in the near future. What else is included there? Let's take a detour. So this is the back end of the masterclass. We have another session coming up on Tuesday evening. But back here for members, and this is only on temporarily, it's going to be released to members that are currently participating in the masterclass series. Here's a calculator. So what we have is a magic calculator, and I provide fib retracement values as a courtesy. Let's see how that magic calculator works out. We'll take NVIDIA as an example. Now, I provided members this morning, and you'll see this when we get to stocks on the move, a zone between 138.55 and 136.95. As you can see, NVIDIA did find support in there, but wait, there's more. What if I took this high right here? That's a pretty good standout pivot high for NVIDIA of the recent past. 152.89. Now I come back to the magic calculator and I put the high value in the pivot high, that is 152.89, and I hit calculate, and automatically we have some support numbers that come on. These are not fib numbers, they're not fib retracements, but let's find the one that was close to where price was opening the day today, Monday, December 9th. How about 137.77. They were opening below 140, and the next number in the sequence was 137.77. What does that represent? Here's a 5-minute chart, and 137.77 represents a pretty darn good area where she bounced the tape. Right out of the automagical calculator, which is part of the MFS Masterclass. And oh, by the way, this calculator will be a standalone product if I have the demand for it. Who wants to see more of the standalone calculator as a product, like a monthly subscription? You can buy access to this exact calculator. Who wants that? Let me see a show of hands in the comments. I'm taking a taste test. Getting back to the spiders for a second, and the weekly chart, we can see where she is, in fact, extended from home base. This is day one of a week. A lot could happen during the week. We're not going to make a federal case out of it on the weekly chart. It was a down day, but she's above all the moving averages. Trend is your friend. We're interested in this spot here because there's naturally garden variety of chart support in that zone. How you doing? Here's another detour. Automagical lazy swing trader algo system. Buys JD.com 3341. Right down here. Nails the low within pennies. We're not going to split hairs over pennies. Today the thing's up 23%. Third exit today. How you doing? A lot of entries hit today for the lazy swing trader automagical algo system. She's humming along. How does it work? We have a watch list. This is what members see from a watch list perspective. You see what's coming before the opening bell. It's a way to get prepared for the next swing trade that may interest you. Once the numbers hit, what happens? An alert goes out and the position is moved to the open trade list. Once profits are taken, the trade then moves to the closed trade list. They come with profit targets. They come with stop losses. If we have to lose, we lose small and fast. Everything is laid out for traders on each and every trade. How about inside the numbers? Let's take a peek, as they say in the trading parlance, at what the pre-market commentary was. This is at 0 dark 30. She was flat-ish. We had 607.60 today coming in as our early pivot right here, 607.60. Above the pivot, she's bullish. Below the pivot, she's not. She tried to capture right at the open bell, 607.60. However, we're not able to do it. The high in this candle here, just minutes into the day at 10 o'clock in the morning, is 607.58. And that's all she wrote. She just went down from there for the remainder of the day. Not a straight line down. There was a period in the day where she tried to recover, but then at the end of the day fell away one more time. So let's see what else we had from a numbers perspective early in the morning, 9 o'clock. We had a zone, 606.75 to 605.85. And as you can see, it was somewhat of an important zone. Here's a low made in the morning, tried to bounce it back, certainly made an attempt, but the market was weak. The bears pushed it lower, tried to recapture 605.85 for a good part of the day, did for a while, but then ultimately fell off one more time. So we essentially had the support area right, or a support area right. It was an important area. The market just couldn't bounce back away from and above that area. It's all in here. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. And you could see we're talking about the bear case, and then the door opens for 604.32. And they nailed that one into the end of the day. And you can see where the market certainly did know about that area. Interestingly enough, there's a gap, an open gap down below. They did not fill the gap, even in this last candle of the day. They didn't get below 604. The gap is at 603.85, I believe. So you could see that the actual number provided to members through Inside the Numbers and the live room was actually more important than the gap that everybody could see on the chart. Sit back and think about that one for a moment. And then pause the video, read the notes, go back to the chart, and double check the work. We had a couple of stocks on the move this morning. We already talked about NVIDIA, and then we had OMC. Omnicom Group getting a haircut as a result of a buyout situation. They're not being bought out. They're the acquirer. 95.87 was the first number on the board. They bounced it there, gave you the base hit, and then the rest is history. They leaked lower for the most part, but they gave you the trade in the manner in which we would like. Early in the morning, slam bam, thank you, ma'am. Then we have a list of markets provided for Inside the Number members and live room members each and every day. Write down the numbers. Put them on your charts. Go see how markets act and react around these numbers. They're not going to hit all these numbers each and every day. These are big-time support and resistance numbers for members of Inside the Numbers and the live room. Put these numbers together with the Automagical calculator, everything that's taught in the MSF Masterclass, and you have the makings of tradable situation. Case in point, here is an IWM number that was on the board, listed as S1, support number 1, 238.75. So they spiked it, they rallied back, but you can see here, the market certainly knows that that number is important. Spent the large majority of the day around, above, and below that number. Sometimes these numbers provide scalp with potential trades. They provide base hits, doubles. Sometimes they're whoppers. Sometimes they're low of day, high of day, all that stuff. For example, here was a number known as resistance number 1 on the board for IWM, and you could see what happened when they got below it. They opened the day above it, but once they got below it, it became resistance and they never looked back. These are quote unquote important numbers, whether they're listed as resistance or support. When price is above, they are support. When price is below, they are resistance. They are important numbers. A lot of work goes into this stuff each and every day. How about the daily chart of the IWM? What's going on over here? Well, now they're eating time off the clock, hovering over the 20-period moving average. Last week, they filled the gap. What we did say is if they stay below this gap, that's trouble for more downside coming. So they closed below the gap on Thursday, popped back above on Friday, and here they are again in that same lower neighborhood at the close of business Monday. Gap's not all that important anymore. They've already filled it. I'm just saying the whole concept is as long as they stay above the 20-period moving average, she's going to be okay. Drip below the 20-period moving average, and the floodgates do open for some lower numbers. Camp IWM, my favorite market-leading indicator. Down about on par by the end of the day with the S&P today, about 0.5%. So we're not going to make anything out of it as a leading indicator one way or the other. She was down on par. But what about the folks down at the transportation department? Not even down as much as the S&P today, down about 0.33%, but down nonetheless. And you can see what's been going on since she made a high on the 25th of November. That was the high, and she's been down every day since then, kind of the lone ranger in terms of down every day as compared to all the other markets that we look at and cover. And what do we call this one? Second favorite market leading indicator, a number 1 canary in the coal mine. What does 16,717 represent? It represents an important place for a multitude of reasons that is, in fact, considered a support area. You have a breakup candle low. You have 16,717. That is a former breakout area. And then you have another breakout area just below, including a gap down here at 16,571.92 or spot 92, as they say in the trading parlance. So there is a lot of support right in this zone right here. I would write that down, put it on a sticky note. Expect a bounce. What about the Q people? As you can see, they've been going up as the transports have been going down for the same amount of time. One of those two things has to give. It's a divergence. Either the transports will bounce back and catch up with the other stuff that was been in a melt-up operation, or other stuff is going to turn around and go into a corrective situation along with team transports. Today, and we only have reference of today, was a down day for all the other stuff. I'm not intending to be Captain Obvious. We're just going through the analysis. What about the financials? What we've been talking about is a little bit under $50. $49.90 was a place. She got below and closed below today, closing on low of day on an uptick or pickup in volume. We're going to pay attention to the financial space. If the financials are teetering on something wrong, that's going to populate or filter through the rest of the marketplace. The financials are not in great shape under 49.90. When you look at the weekly chart, what were they doing? They were getting a little bit extended from what? Home base. Home base is what? The 20-week moving average. What works off some of the quote-unquote overbought condition? Go sideways for a while, let the 20-period moving average creep up to price, pull back, have price come in toward the 20-period moving average, a combination of both. As you can see, from a longer-term perspective, there's nothing wrong with the XLF. From a daily chart perspective, she is changing ing in italics character. This is called reading the tape based on a variety of different time frames. What about Smash Mouth? Down about 1% today. Pretty good leading indicator of the tech space. The Qs were down about 0.8%. So this was leading by a touch on the downside. We're not going to make a federal case out of it. Last week, they got back above all the moving averages on the daily chart. And then all of a sudden, here we are dipping back into them. Back and forth through the moving averages diminishes the importance of said moving averages. Above them, she's bullish. Below them, she's not. In and around them, we're not going to really pay too much attention to the moving averages themselves. What we do have are some lower highs. We have some higher lows. We have a triangle situation brewing in the SMH or Philadelphia semiconductor space. That's what the triangle will look like on a weekly chart. And some traders would say, hey, wait a minute, you can't do that. The triangle would have to be here, and she's already broken below. And I would tell you it's part science, part art form. I would tell you both things can be true. Yes, she did break below the lower channel of this triangle, but then all of a sudden, who's to say we can't use this connection point and say, hey, she's still in another triangle where she is in the middle and above all the moving averages on the weekly chart. She's still in an uptrend anyway. So both things can be true at the same time. Part art form, part science. Stick around. I have more to teach. MSF Masterclass series comes with a lot of bonus material. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.